Good afternoon, everyone. Welcome to today's market review. My name is Stock Darts, and we're going to do what we always do on Wednesdays. We're going to look at the four major market indices. We're going to look at the S&P 500, the Nasdaq Composite, the Dow Jones, and the Russell 2000. Once we finish looking at those four indices, we'll also take a quick look at the U.S. dollar. We'll see how it's affecting gold, silver, and oil, and we'll also start taking a look a little bit more into Bitcoin and Ethereum, and maybe even some other crypto coins, depending on the time. I think at this point that's become an important space to keep track of, at least Bitcoin, particularly as it sort of seems to be replacing gold as one of the assets that people would rather try to store their value in. So we'll go ahead and look at that as well. If you like what you see here, if you're interested in following more of my stuff, go ahead and visit me at or follow me at StockDarts on Twitter. I typically post on there whenever I'm going to do a live stream or whenever I put up a blog post. You can also find me at YouTube under the same name, StockDarts, where I usually repost these videos. And you can also visit me at patreon.com/StockDarts, which is probably the best place to go if you're interested in more of my information, as that's where I typically post trading ideas as well as the reposts of these Wednesday market reviews. And so what we do normally on Wednesdays is we go ahead and try to analyze the market and figure out what kind of price environment we're in. And then I'll go ahead and try to trade based off of that and try to tailor my trades to or find strategies that work for whatever environment we're in. And you'll find those always at patreon.com/StockDarts. A lot of the content on there is either free or gated by time. But eventually, if you're just looking to learn and you're not looking for just actionable trades, then you can go ahead and visit there. If you're looking for actionable trades, well, it's only $8 a month to have the lower subscription, which gives you access to all of the watch list ideas. So it's perfectly acceptable and affordable for pretty much anybody, regardless of how small your trading account is. Let's go ahead and get started. The first thing we want to do is take a look at the S&P 500. We're going to look at the ETF SPY. Now, I've been a little bit weary of the market over the last couple of weeks. I feel like we are in the process of finding a ceiling, not necessarily topping out, but finding the top of our current range. There's plenty of room for us to backtrack and still be in a pretty solid trend, and there's definitely a lot of room to backtrack and still be in a solid long-term trend. So I think overall, I don't think the market's in danger right now. I just don't feel that the risk reward is really in a good state here for traders that are looking to trade to the long side. So the last couple of weeks, I think the action has really slowed down, at least as far as the trades that I'm looking for and the trades that I've found. We've still found some trades that have worked slightly for us, but nothing like what we had at the end of January and the beginning of this month, where we had just a string of explosive trades that worked out really well for us. And again, I think that's partly a function of where we are in the market. We have a market that's been up pretty steadily since we rebounded off of the 50-day moving average in the middle or towards the end of January. And at this point, the action's just getting stretched out, and we just don't have the same risk reward that we had before. And so it's becoming a lot harder to find good trades because, one, most of the good trades exploded with the market and are now reaching a ceiling where they're having a hard time breaking through. Two, those that haven't and are giving us good risk reward are the stocks that are really not giving us a lot of momentum. And so even if we find a stock, it's been difficult because of those two factors. And then on top of that, you tie in the fact that we still have earnings going on. There was a few charts that I liked when I was reviewing the markets yesterday, because we had a holiday shortened week. But they most of the stocks that I liked, or most of the charts that I liked, had earnings reported in the next day or two. And that's usually a non-trade for me as far as directional trades is concerned. I do enjoy trading earnings, but with earnings-specific trades. For regular directional swing trades, I feel like avoiding earnings is probably in the best interest of most traders, because it introduces a lot of volatility and risk that maybe you're not ready for or anticipating. So more often than not, we try to steer clear of earnings when we are just taking our regular directional swing trades, which has made it a little bit more difficult to trade over the last few weeks because we've had the meat of the earnings season kind of come through. And it's starting to wind down a bit with this week and next week. But for whatever reason, the charts that look good this week were the ones that were heading into earnings. And so it made it a little bit more difficult to find good trading opportunities. Luckily, the cryptocurrency space has been providing plenty of opportunities so that I don't have to try to force the issue here in the regular stock markets, but we'll get into that in a little bit. Now, as far as the S&P 500 is concerned, yesterday was a nice start to the week with a gap higher to new all-time highs across the board, but we faded We came all the way down. We closed kind of weak, and today we dropped a little bit. And while we're still holding steady, and so this is what's making it a little bit difficult right now with the stock market. Is as you can see, we're going to zoom in. Over the last couple of weeks, we've had a lot of selling candles, but the market has not really been impacted by it. You can see we moved up to the top of the channel. We tried to break higher and failed. Then we tried again and failed. Then we did actually kind of make it to the end last week and break to new highs. But then again, as we started this week, you can see we failed and we came right back down now. It's interesting because we're finding a lot of supply and a lot of selling pressure up here at these levels, but the buyers are still kind of chasing the price action, and they're still trying to get in and kind of maneuver into looking for an extra push to the upside. So despite the fact that we are really finding a lot of selling here and are encountering a little bit of distribution with some of these candles, the buyers have not kind of given up yet, and they haven't really given a, kind of caved in and given the control of the price back to the sellers. And so the question is, are they going to? And if not, what's going to happen next? Now, I think they are. I think we're going to pull back. I think we're going to come back and test down here around the 20-day moving average, as well as this sort of horizontal level that we have going right around 385. We pointed this out last week, and I think that's a good level to go to. But I think with the action that I've seen, and particularly when you look, if you look over here on the right at my watch list, you take a look. That little patch of green was cryptocurrencies, but if you look at all these stocks, the majority of them are red, right? And so it's not reflected in the indices right now, but the majority of stocks that I follow are red right now. And so I'm seeing a lot of weakness across the board. And while we're not seeing it reflected in the overall market indices at this time, it's something that I've noticed recently. And a lot of the stocks that are green are some of the for lack of a better word, some of the crappier ones that I don't really want to trade because they've been pretty poor behaviors or pretty poor movers over the last year or so. Not to say that they can't provide you with great returns, they can. I've been looking and focusing on different types of trades over the last year, and basically the stocks that I'm not focused on are the ones that have been kind of getting the money rotating into them, but that happens a lot of times during the later stages of a rally or also later stages of a bull market. Now again, I don't think we're in the later stages of a bull market, but I think we are in the later stages of a rally, which began during the holiday season last year and has kind of continued through the turn of the year and up to now. And I think that we're starting to get towards a late stage as far as this particular channel is concerned. And there is room for us to come down and retest the channel and continue to kind of climb through it. But as you can see, we are at the top of the channel. And each time we've gotten to the top of this channel, price action has been rejected. Now, that's not going to be the case when we get to the small caps and IWM, but that is going to be the case for the S&P 500 and the NASDAQ and the Dow Jones. And so what we can expect is we have a stock, even though we're rallying and this, the market is rallying, it also, to a certain extent, depending on how you interpret it, is range bound, right? Because we're trading in a pretty clear range, and we're towards the top of the range. And typically, what happens there is that you eventually find the ceiling and you come back and you test the bottom of the range. And so, my expectation at this point, even if we haven't seen it yet, is that there will be more selling pressure and that we will drop back and test the 20 and test the 50. Now, does that mean I won't be ready to step in if the market tries to rally here and tries to explode past these last 4 or 5 days? No. Matter of fact, my trading ideas on Monday were based on the premise that there is a chance that the market fakes us out and starts to rally again. And if so, then the stocks that I was looking at are the ones that are likely going to benefit and are giving us good risk reward. However, I suspect that that's not going to be the case and that we're likely going to pull back. And so what am I doing personally? Well, like I said before, I had a couple of stocks that I'm watching that I posted on my Patreon page, which are stocks that will benefit if the market goes up. And as a matter of fact, one of them is already doing well, even with the market kind of stuck in neutral. If we do pull back to the 20-day moving average to this 385 area, well then I have a watch list, and I'm looking at names that I want to buy at a discount, names that I feel have strong potential, but maybe are at prices that are a little higher than I want to enter at the moment. And so that's what I'm going to be looking at if we come back to 385, and even more so if we come back to 375 or so, around the 50-day moving average. So that's kind of my plan of attack as far as stocks are concerned right now. Is I have a couple of swing trade ideas that are still holding and still giving us good risk reward that I'll enter if we continue to climb higher, or that I've already entered. But if we do pull back, I'll be looking to enter trades as we pull back to these levels of support. And like I said, on the S&P 500, I'm looking at SPY. The first level of support that we should find some initial buying at is around 385. That's the 20-day moving average, and that's also the previous highs that we formed in January. If we fail there, we're likely to come back and test the 50, and this ascending trend line is not that critical right now, because it's not really intersecting with a lot of price action. It's just giving us a good visualization of what's going on. In reality, what we're worried about is the 50-day moving average. And then finally, if my suspicion is correct that we are towards the end of this rally, there's a decent chance that we come down here and test around the 370. But that's not something we need to worry about from here to next week. That's something that we can explore a little bit more deeply, or investigate a little more thoroughly if we do pull back into the 20 or the 50 from here next Wednesday. And then we'll have to decide what's going to happen if we do breach those levels, and what the shape of the price action is going to be as we head into the end of February and into March. But as far as this week is concerned, from here to next week, which would be the 24th, will be Wednesday, I suspect that it's really more a question of which moving average we find support, whether it's the 20 or the 50. And so that's what I'm going to be looking at as far as where I would be looking to buy the dip, or to start looking at maybe trading a little more aggressively as far as finding stocks to trade. Like I said, right now I'm pretty passive as far as what I'm looking to trade, because I feel like the risk reward's just not that great at our current levels. And I think that we need a little bit of time for this market to kind of recalibrate and head back towards some of these levels of support. Let's take a look at the NASDAQ and see if it's doing something similar. As we can see, the NASDAQ also has a nice little channel. Similar to the S&P 500, we gapped higher yesterday, and we lost it. And we kind of came back, and then today we've gapped a little bit lower, but you can see we're still holding pretty steady. Now you'll notice, relatively speaking, the NASDAQ has lost a little bit of the strength that it's had, right? So if we go back to the S&P 500, you see where we are in this channel, where we are with respect to the 20-day moving average. Now the NASDAQ's not that different. We're still holding above the 20. We're still inside the channel, but as you can see, we've already kind of come back towards the middle of that channel. And getting pretty close to the 20. Now, longer term, the NASDAQ still shows a lot of relative strength compared to what we're seeing on the SPY. As you can see, we haven't really tested the 50-day moving average yet, right? So this channel is a little bit tighter, a little bit stronger on the NASDAQ. And that's to be expected. The NASDAQ has been the leader throughout all of 2020 and has continued to be one of the stronger indices as we head into 2021. And I think that's going to continue to be the case as we move forward. We've reached a critical point in our society where the tech names are just more important. And so the stock, the NASDAQ is going to be one of the indices that's kind of more critical as far as judging the state of the market, and will then, more often than not be the stronger area, because those are the names that are really showing promising growth for us. All right, so now as far as the levels that we can look at with the NASDAQ, so we've got, similar to the S&P 500, we've got a horizontal level, which is the highs that we've formed around January, right? You can see we kind of topped out here around 329. We're almost there already. That's the first kind of wall, or first kind of floor, where we could find some buyers to step in right around the 20-day moving average. Again, keep in mind, the 20-day has supported price action on the NASDAQ since all the way in November. So there's a good chance that we hold, or if we lose the 20, we just come down a little bit below it and then come back and try to test it. So if we have a shallow pullback, which we're kind of in the midst of already, then we should expect support to come somewhere in between about 328 and about 325, maybe 324. If we do have more selling pressure, and we see the SPY come down to the 50, we're likely going to see the NASDAQ come down to the 50 as well. Now, that is going to probably become a much more important area of support as we come down and test not just the 50-day moving average, but as you can see, we were trading pretty calm. Then we had this explosion of volatility. It doesn't look like a lot on this chart, but you can see the size of the candles got a lot bigger towards the end of January compared to what we were seeing in the beginning. That's likely going to be an area where there's going to be some emotional attachment from traders, and will likely offer support because, again, it's where things started to change and where the picture started to change a bit in the market. And so that's going to likely be a good area to look at as far as support is concerned. And I don't think we fall below that, at least from here to the next week or next couple of weeks. We need to see a bigger shift in market sentiment before I think that we start to lose some of these areas. Like I said, I think more than anything right now, I don't think this market is topping out because it's ready to roll over. I think it's more along the line of this particular momentum is starting to get exhausted, and we just need new buyers to come in and buy at levels that they consider to be good value. And that's going to be either down here around 325 or maybe all the way down at 315. But I think once that happens, we'll have a new blood kind of come into the market and willing to support price and willing to try to push it to make its way back up a little bit higher. The big question will be, as we pull back and test these levels of support, will we lose this channel? Will the price action erode to the point where we start going sideways instead of continue to kind of mimic this nice upwards 45-degree angle that we've had for nice 2 or 3 months now? Again, you'll note the moving averages are still holding steady. The 20 and the 50 are still parallel. So at the moment, the momentum is still pretty strong, but as we start to waver here, we'll see if the 20 starts to curl over and start to head towards the 50, which I think will be a good sign that we're starting to hit a spot where the market might get more tired. All right, so let's look at the Dow. By the way, if anyone in here has any questions, feel free to type it into the chat. Even if you don't have a stock that you want me to look at later, if it's just a question about any of the technical analysis I do here, or any of these chart patterns, or if you have a different opinion on what the market is doing, feel free to put it in there. It's always nice to interact with people rather than just kind of talk to a screen for an hour. So let me know if you guys have anything you wanted to ask as far as what we're doing here. All right, so interestingly enough, the Dow Jones, we have a little bit of a different picture. Now, in reality, it's basically still the same kind of, it's still really just a channel, just like the S&P 500 and the NASDAQ. But because of the way it behaved in January, it looks like it's a little bit different. We've got a couple different stages to the price action. As we were trading a nice channel, and then that volatility that came in towards the end of January that we just pointed out on the NASDAQ was even more exacerbated on the Dow. Now, a lot of this was with vaccine hopes, of some of the areas of the market that have really struggled because of the quarantine and people having to work and trade and shop and consume from home. This was when we started to think that maybe we could open up our economy a little bit more. We got a little excited. A lot of the Dow names, a lot of the small caps started to really explode, and then they started to act weakly as maybe people realized that we're still not really in the clear. And so all of a sudden we went from the Dow being the leader to the Dow being the worst as far as the weakest of the indices. Now, we had a very critical breakthrough here with the Dow to be able to kind of catch up and really start trading the same as the other three indices, the SPY, the NASDAQ, and IWM. And so they've made their way back up. And as you can see, over the last couple of days, relatively speaking, the Dow is still holding up better than the S&P 500 and the NASDAQ. So this is still showing us that shift where money is going into some of the more beaten up names in the markets. Yesterday we had the same gap up and fade as the other markets, but we still closed above all-time highs. And if you look at today, we're still above most of the price action from last week, and really just basically pennies away from yesterday's highs, right? So we're pretty close to all-time highs here, showing that there is strength persisting in the Dow names. And again, this is kind of a function of the rotation that's been going on. And part of the reason why my watch list is so red is because a lot of the names I follow are the tech names, or the names that have benefited throughout 2020. And the names that are doing better now are some of the names that have done really poorly over the last year or so. and the Dow, which was one of the indices that struggled during 2020, is starting to pick up a little bit of steam. Now, this is part of the reason why I still think there's a chance that the market surprises us and continues to go up, is because it's rotating back and forth rather than pulling back, and so it's giving the S&P 500 and the Nasdaq names are getting a breather, while some of the Dow and IWM names pick up a little bit of strength, and then when they take a breather, the Nasdaq names come back and they start to pick up a little bit of steam. Now, I think that at the moment, most of the indices are still getting a little bit tired. As you can see, IWM is actually down 1%. So it's actually slowing down. So the Dow is kind of holding up on its own today, which is probably not that significant because obviously it has the least amount of components. So it could be that one or two names in here are just kind of propping it up. But it is important to see that it is holding up better than the S&P and the Nasdaq for now, which again shows that some of these stocks or some of these areas of the market that have been struggling are holding up a little bit better. Now, as far as the key levels we want to watch, I think the S&P 500 and the Nasdaq levels are more important. But if we do get a pullback, you can see there's a convergence of quite a few different levels of potential support here, right at 311. We've got the previous highs from the last, from basically most of January. We've got the bottom of this channel, which is coming up to that area, and we also have the 20-day moving average. And all of them are converging right around 310, 311. So that should be a pretty good form of support if we do pull back on the Dow. If we fail there, then we're likely to come back and test the 50. And knowing the Dow and how weak it's been for the most part, not counting the last couple of days, we might even breach below the 50. So what I look at right now as far as key levels on the Dow Jones is about 311, 310, and then probably down here at 306, and then more likely than not, move all the way down to 304 to, and maybe down all the way to 300, but likely down to the 303, 304 area, where we would again see more support, but it would also be an indication that this rally has reached kind of an end point, because we would have breached it twice now, and likely transitioned to a more range-bound market, which I think is probably in the cards as we head into March. Is a market that's going to start trading more sideways. Again, not a market that I think is going to top out and going to like crash or drop to really low levels, but a market that I think needs to kind of stabilize and start trading in a broader range sideways rather than continue to climb and continue to push the envelope as far as what traders are willing to chase. And so that's what I have with the Dow. Again, I think the S&P 500, the Nasdaq levels are going to be more critical, and the Dow will just be a reflection of what those other two indices do. The last index we want to look at is IWM, and the small caps have been, relatively speaking, the strongest index throughout the start of 2021, and actually the close of 2020 as we headed into the holidays. You can see the channel on this one. We could still draw a channel, and it would still be kind of make sense, right? So if you take a look at what we've got here with IWM, it's kind of trading in a channel, same as the other indices, so it's not that different. And you can see what's happening here. We kind of topped out, and we're kind of coming back into the middle of the channel, very similar to what we're seeing on the Nasdaq in particular. Again, notice that we've never lost the 20-day moving average for more than a day. We haven't approached the 50, and we still have a very strong, persistent trend upwards, with the moving averages not really wavering yet. So this is going to be critical, and I think this index is way more important than the Dow when we are looking at where we're going to pull back over the next few days. Is if IWM loses this channel, heads down to the 50, then that's going to likely mean that the SPY and the Nasdaq are also going to kind of turn sideways, and I think that would be a pretty good indicator that we're probably going to start trading sideways rather than continue climbing up. If the market is going to persist upwards and to continue to kind of rally, we should see support on IWM around the 20 or just below it as it comes back and starts to test this upwards trajectory. Worst case scenario, we tag the 50 and then quickly bounce back up. But I think if we come down to the 50, that would be more indicative of a market that's starting to transition towards range-bound price action, rather than one that is continue to climb upwards. All right, now, as far as the key levels, particularly if we do falter and drop back a bit, Um, the first key level, of course, is going to be right around the 20 or slightly below it as we test the highs from January. It's going to be right here around 217 to 220. If we lose that and we drop below this channel, then like I said, we're going to come down to test the 50 and likely this area right around here, around 207 and 205, which has been an area that was resistance that we just grinded through and then was quick support as we kind of faltered a bit at the start of February. If we fall below that, then there's another area down here around 200. But again, I don't think that's something we worry about this week. It's something maybe we concern ourselves with next week or in March, depending on how we navigate this the current the current correction we actually are starting to see today. Again, if you ignore the Dow, the S&P 500, the Nasdaq, and IWM are all beginning to correct, and they're moving back towards support. And I think it's just going to be a matter of time before the Dow follows them and changes the song it's trying to sing right now. All right, so looking at the four indices as an aggregate, we're pulling back. It was to be expected, particularly when we saw the selling pressure at these highs. I mean, again, I think it's a pretty clear picture. If you look at IWM, you take a look at the candles that we have formed as we tried to break to new highs, and you can see we had a spinning top, then we had almost a hammer, then we had a hammer, then another little hammer, and then again yesterday the big fade. Now again, hammers at the top of a price range is not a positive sign. That's a sign of selling pressure that's pushing the action down, and even if we close off of the lows, it still shows that there was selling pressure, that the markets succumbed to the sellers for at least a portion of the time during that day. So these aren't the kinds of candles you want to see at the top of a range. They're the kind of candles you want to see at the bottom, showing that buyers are making an impact. So in this particular case, it was broadcast to us that there was a lot of distribution up here and a lot of supply that we were going to have trouble pushing through, and as you can see, we weren't able to at the moment. Now, it could flip. It could flip just as quickly as today's close or tomorrow, and we could make our way back to highs. And that's why we need to continue to watch for good trading opportunities, because the market is still in a very strong bull run. So despite the fact that a lot of what I've said today is in anticipation of a market drop, you'll notice I haven't mentioned once anything about shorting or trying to take profits or trying to close out trades. All I'm thinking about is with respect to when I want to buy and how I want to buy. So either I want to take shots a little bit more sporadic or more cautiously if we rally from here, and I'll be a little bit more aggressive as we come down and test support, depending on what support is and how we bounce off of that support. Right? So the last thing I want to say is, as far as this is concerned, let's say we do drop down to the 217 area and test the 20-day in the bottom of this channel. That doesn't mean I will immediately start buying long or going long on different trades because it hit that level. I still want to see the buyers show up and decide whether they're going to support, because they can support here or they could falter and we could find support all the way down in the 50. So make sure that you are waiting for the price action to reverse back up before you start taking more shots to the long side. But again, we should get a little bit more actionable trade setups in the next couple of weeks once we get some of this selling pressure to kind of dissipate. But right now, we need to come back down. We need to get better risk reward. Right now, stocks are not at a good value. When you look at what the potential upside is versus the potential downside, it's not in our best interest to get too aggressive here. We want to be able to be more patient and wait for better opportunities. You don't. Unless you do this for a living, you don't need to trade every day. And if you do this for a living, there are better places to trade right now than trying to force a square peg into a round hole and try to go long at these kinds of spots. Okay. All right. So let's take a quick look at the U.S. dollar. See what it's doing. You can see the U.S. dollar. This is the UUP index. We had a nice little bounce today. After it found some support around its moving averages. It's still doing the same thing, which is basically just kind of stabilizing after the big drop that it had, and just kind of grinding more in a neutral manner. Now this tends to happen. You don't usually have a free fall like the dollar had. We come all the way back and you take a look. You don't normally have a free fall like this that turns into a quick rally back to highs. Typically when you bottom out, you trade sideways. And as you can see, the last time we formed the base, it still resulted in a further move to the downside. So all we're doing right now with the US dollar, and we're just going to go ahead and we'll make a new rectangle actually. All we're doing right now is basically the same thing. We're trying to bottom out. We're trying to form a base. And reverse a lot of the downward pressure that is being exerted by the Fed on the US dollar. Now, if we look at individual currency crosses, this is the euro versus the US dollar, which is going to basically be an inverse of what we saw with the UUP index. Because, again, this chart is based in euros, so up is good for the euro, down is good for the US dollar. And as you can see, the dollar has started to pick up a little bit of steam again, and the euro has pulled back off of that. So you can see the euro has lost traction. The 20-day has crossed below the 50. It's pulling back. However, it's still the mirror image of that other chart. We have that base that was formed here, and we have a new base that's forming up here. And it's still to be determined whether the US dollar is going to eventually kind of push back and push the euro back down, or whether the euro will eventually gain more strength and start pushing the dollar as it tries to make its way back to highs. Now, if we look at the US versus the Canadian, we'll see the dollar actually still struggling here. And this is a function of oil actually being pretty strong. So there's two things going on here. One, the US dollar has been weak for a long time, but two, oil has been picking up strength, and that has kind of pushed the US dollar versus the Canadian down a bit. And we'll get into oil in a second. And then finally we have the US yen. And this is the one currency cross where the US dollar actually is doing better than its counterpart by a decent amount. And you can see the US dollar broke a very nice downtrend and has made its way up. Now, I know a lot of you guys don't trade these, but it's important to understand what the US dollar is doing, which is why I like to look at some of these currency crosses. Also, like I said before, if you're someone that's just making a couple of swing trades to support yourself or to kind of have your money doing stuff, then you don't necessarily have to trade every day. But if you're a professional trader, or you're someone that wants to do this as more of a living or supplemental income, then you need to find other avenues to make trades when the stock market is not providing you with good trades. And I know at the moment not a lot of people really care about forex trades or forex pairs, but there are a lot of clean trades that happen with these. If you take a look at what the US dollar did here, this was pretty textbook. We had a breakout, and it was pretty clean up to the next level of resistance, which is the 200-day. It came back, and if textbook again, it found support right where it was supposed to at the 20-day, right at the previous breakout, and it made another nice move. And these are big moves that you can get if you understand how to trade using technical analysis. So my advice to you is, if you're someone that's trying to trade as a job, whether it's a part-time job or a full-time job, start exploring other avenues besides just the stock market, because there's a lot of opportunities that are really starting to present themselves in other areas. And forex has been around for a while, but this is an area that seems to be ignored quite a bit. And believe it or not, a lot of times it gives us a much cleaner trades than what you see with the stock market. And so even something like the U.S. Canadian that really hasn't done well recently, it's actually been pretty good if you're trading on the short side, or along the Canadian side, and it's still worked out pretty clean. Now, let's take a look at what oil has done. As you can see, oil continues to really rally. Now, I actually feel like I missed some good opportunities here, and this is why it's important to really pay attention and to make sure that you kind of have a thorough way of approaching the market. Oil, we've been on top of oil. We cover oil every Wednesday, right? And so I've been kind of watching oil, and it's been doing well, but I haven't really traded the energy names enough to benefit from what has been going on here. And recently it's the shippers that have really taken off, and they've exploded and given some big returns. And I wasn't really paying attention to them. So it's important that when we look at these, that we make sure that we understand the ramifications of what we are seeing. And that's why I like to go over oil, gold, the silver, is because a lot of times we see this and we're like, wow, oil is up, energy demand is up. And I've been using this as a proxy for what, basically what people think of our economy. And the fact that oil is ramping up, I think, is telling us that the market believes that our economy is going to continue to kind of expand and open up a bit more, and is expecting more energy consumption. And I've been using it as a proxy for that, and it helps me get a better gauge on the market. But I didn't pay enough attention to some of these oil names that would benefit from this. The drillers, the shippers, I did pay attention to some of the refiners, but make sure that when you guys see this, try to understand all the avenues of how these things can benefit you, and what kinds of trades or trade ideas these things open up, because there's usually a lot of different ways. When you see something like this, even if you miss this move on oil, there are other ways to kind of capture this and make sure that you don't miss it. Let's go real quick to FinViz. And again, like I've pointed this out a bunch of times, but if you come over here to groups, you can see what groups are doing well and what groups are not doing well. You can see energy. Energy's been towards the top of it for most of the last like half year or so. But what I like to do a lot of times is you come over here, you try to figure out what's hot and what's not, and then when you go to your screener, you could sort by industry, right? And so so if you look at, say, marine shipping, right, which a lot of these are shipping oil. Oops, I double clicked there. So if you look at marine shipping, right, we go to the charts, you can see a lot of them have really ramped up recently, right? Take a look at what some of these have done. And so there's been some opportunities. There's a lot of, well, wait a minute. There we go. So 31 charts, that's more like it. Now take a look at what these things have done. Look at DAC, look at Eagle, Bulk, look just the explosions that we've seen on most of this sector. And again, it was something that we probably should have anticipated, because we're always looking at oil on these Wednesday market streams. So I just wanted to point out a good way for you guys to go ahead and try to add to your analysis. And this is how you find swing trades when you're trying to figure out what we're doing. So when we go over all these different key areas of the market, come back and investigate a little further. Go to FinViz and take a look at, again, it didn't have to be in the marine shipping. We could have gone to the energy sector, and just any of these, like the drillers, perhaps, right? And take a look at what the drillers have done. And again, they've all rallied very strongly. Maybe we see something like this that still hasn't. It could give us an opportunity for a swing trade in the near future. You can see this is actually a pretty nice triangle, right? So we can come over here to Patterson. And Patterson's not looking too shabby right now, right? Whoops. For those that wonder, sometimes my mouse is very sensitive, so it often double clicks or drags when it's not supposed to. So we could go and find something like this that maybe is lagging a little bit behind, and try to find some opportunities like that, right? So just kind of giving you guys different ways of trying to find success in this market when it feels like you're not finding good trades, or when you're finding when you're kind of not really sure where the money's flowing or why the market is up, even though your watch list is down, right? And so this is one of the ways of doing something like that. All right, so that's oil. Let's take a look at gold and silver. Again, like I've said for the last couple of months, I have no interest in gold right now and no interest in silver. As you can see, gold continues to fall, despite the fact that the U.S. dollar has not really been that strong. Gold continues to kind of really struggle here. Dropped below all its moving averages, fell way below support, and is currently starting to just really backtrack a lot of the rally that it had in the middle of last year, and it's making its way back towards a pretty critical base that it formed towards the beginning of last year. I need to see a lot change before I'm interested in gold or silver, and that doesn't change. Silver looks a little bit better. Some of this was related to the GameStop nonsense that happened a few weeks ago, and they tried to push silver up with it. So it's not really a given that silver tries to make its way back up to 27, 28. It does look better than GLD. So if you're looking at trading a precious metal right now, silver's all right. The problem with silver is if you're just trading SLV, I don't think that this reward's worth it. We've got about $2 of upside. We've got about $2, maybe 3 of downside. And so there's, I think, better areas for you to try to get good return rather than try to play it on this. You might tell yourself, well, it's a safer trade because it's a commodity, but it's really not, because it can still drop $2 pretty quickly and make its way back if it wants to kind of follow gold down the spiral. So I don't think this is a good trade, and honestly, I still prefer something like this. Now, maybe not today, maybe not, obviously it's been kind of ramping up and it's been more difficult to kind of chase it as it continues up, but we were looking at Bitcoin over here when it was breaking out in January and February, and this was a good spot to try to get involved, whether it was Bitcoin or whether it was Ethereum. And I still think these are the two better areas if you're looking at kind of a commodity, pseudo-commodity, basically an inverse play to the dollar. I think you're better off with this kind of stuff. And so this goes back to what we were discussing with the forex pairs. If you're someone that's trying to trade as a job or a supplemental income, or if you're someone that just wants to be more aggressive about how you have your money working for you, you should be exploring and learning about this if you haven't learned about it yet. Now, could it crash again like it did in 2018, 2017? Of course. But the returns you could get until it happens are just incredible. So if you take a look, the last time Bitcoin had a big rally, or last time Ethereum, well, let's go to Bitcoin. Last time Bitcoin had a massive rally was at the end of 2017, and it started to really fall apart at the beginning of 2018. And it had a pretty big drop. It went from almost 20,000 all the way down to basically 4,000. However, just because you bought it here doesn't mean you had to hold it all the way to 3, right? You can, just like any stock, you can go ahead and close it when you don't like what it's doing. Notice the momentum it's picked up again as we started this year, where it went from 12 to 50,000 in the span of just a few months. You don't get those kind of returns trading stocks, or, well, very rarely do you get them trading stocks. You get them pretty consistently trading cryptocurrencies. So this is an area that I think all traders should be learning about. I think it's still the future. I think it's going to be a very big key to the future of finance and to investing, and it's something we need to really take advantage of. So again, take a look. So when I was showing you my watch list before, it was all red. It was a sea of red with stocks. If you take a look at all the cryptocurrencies, it's a sea of green, right? We've got stuff like Binance is up 20% today. You've got something like this that's up another 16%. And these things have basically doubled, tripled in price since the beginning of the month. Not even since October, but since the beginning of the month. And traders that aren't paying attention to this are missing out on massive returns. And so, even though the market has stalled out over the last couple of weeks, I've had a really good productive month because I've followed through with some of the big gains we had earlier in the month in stocks, with big gains in some of these cryptocurrencies that I trade and that I follow. So it's important that we make sure we are exploring all the avenues that we can as far as trying to find good trades, because there are good trades out there even when it doesn't look like it. So we look at the S&P 500, we take a look at what it's done over the last couple of weeks, and it really hasn't gone anywhere. And yet I just showed you shippers have exploded, and cryptocurrencies have exploded, and even oil has exploded, or even you could have even taken a forex trade with the U.S. versus the yen, and they all would have given you good production while the stock market is stuck in neutral. So make sure that we kind of follow that, and we know to explore all our trading opportunities. All right, that covers it for today. If anyone in here has a chart request, feel free to type it in now. If not, we can call it a day. Those of you that are in here, if you don't want to ask here, you can always ask me on Twitter. Again, just at StockDarts at Twitter. I'll be more than happy to send you a chart request or answer a question that way if possible. Um, Other than that, hope you guys have a good rest of this week, and we will meet again next Wednesday.